Welcome to the State of AI, where we explore the rapidly evolving world of artificial intelligence from every angle. Join us as we bring you the latest news, spotlight industry-leading companies, and profile the visionaries shaping the future of AI, robotics, and beyond.
This Black History Month, we're celebrating the power brokers in business, executives, entrepreneurs, and proven change makers who have advanced the economy and society. I spoke with John Hope Bryant, the founder and CEO of Operation Hope and the author of the book Financial Literacy for All, about the importance of financial literacy and how education is critical to AI-proofing your career. Listen.
What we need is a reconnect education in the aspiration. So financial literacy and artificial intelligence. Because AI is going to change everything, and money is everywhere. These two things have to be fundamental. You shouldn't graduate from high school without a financial literacy degree and an AI certification. In Atlanta, every kid in Atlanta public schools has a Hope Child Savings account in kindergarten. Statistics show if you have an account with $100 in it, you're 75% more likely to graduate from college. We're doing that for every kid in Atlanta public schools. That Citigroup holds the accounts, Mayor Andre Dickens funds the accounts, private sector supports it, and then they come in and volunteer, giving the kids now a role model who they can be. They're talking about stocks and investment. That should be in every community in America. That's that. Then we have the AI LP3, which is Sam Altman of AI, OpenAI, and I co-chair the AI Ethics Council. We've created a pipeline through Prosperity Project with all the HBCUs. Georgia State University is our partner, Atlanta Public Schools, to teach artificial intelligence and to nurture these kids in creating new jobs and the innovations of the future from kindergarten through. They're already on the device. They're already on their devices. They're already technologically centric. Why wait for AI to destroy jobs? It's coming. Let's get kids to create the new era of jobs. So that's happening with AI LP3. We just announced that in Atlanta. This sort of out of the box, innovative thinking needs to be scaled across the country. Financial literacy is a civil rights issue of this generation. Should be in every school, urban and rural, black and white, rich and poor, all across the country.
With that in mind, how do you go about AI-proofing your career trajectory as well?
Well, look, the world went from 1850 to 1910, horse and buggy, to the automobile. One out of 10 jobs in 1850, 1870, 1880 was I think it's called a farrier. They were basically changing shoe hoofs. By 1910, that whole thing was gone. Horses were gone. Automobiles took over. We're there again, but it's now 2023 to 2030. Everything's going to change. So either AI runs you over or you run it. We need to now train, so 75 million jobs will go away, 88 million jobs will get created. But you got to reorient yourself to master the technology that will be driving AI versus letting AI drive you out of a job. If you have a high school education right now and no hustle, you're in trouble. You go to the airport, the grocery store, not the grocery store, the fast food restaurants. I don't want to name the ones in particular for your show, but it's a pad. You're punching in your order. That used to be people. It used to be 12 people behind the counter. Now it's 2. Right? All that's being automated, and there's robotics on the other side. It's already here. So you got to future-proof yourself through becoming massively educated.
I also asked John about getting a portfolio started in this bull market and his investment advice. Go for fundamentals and don't overcomplicate it. Here's what he had to say.
You like Under Armour. You wear Under Armour. Buy Under Armour. You like Nike shoes. You like Walmart. You like Target. You like Delta. Buy that stock. If you like it, your friends probably like it, the market probably likes it, it's probably a good investment. Buy fundamentals, buy the basics, buy the framework, the thing that is the architecture for the biggest economy in the world. Don't get fancy. There are 3 things that have never reversed in American history. Real estate values, stock market values, and American GDP. It's never gone down. It goes up, there's a recession, it recedes, and corrects above the line. So financial literacy tells you buy it, hold it, buy fundamentals, hold it, don't sell. What people do is they buy it, sometimes they buy flaky stuff, by the way, because they want to get rich quick.
Right.
Get scared, sell it, which makes things worse, right? And then somebody else buys on the dip. So I think by fundamentals, of course, I love real estate, you know that.
Yeah.
And I'm the largest minority owner of single-family real estate in America, rentals, and I'm about to buy more. I'm about to go into multifamily, and this is the business side of me. So I just believe in this country. I believe it is the bright light and the North Star for the world economy. It is the gold standard, if you will, for it is the best currency, it is the best economy. And if you buy here near economic activity, you're going to do fairly well.
John, we got to leave things there. Just quickly though, what's the market that you want to buy in right now? You mentioned your real estate holdings. What's the next hotspot?
I mean, look, if you're smart about it, it's technology. I mean, you can't. It's all around you. If your life's not centered in technology,
Yeah.
You're not sitting still. You're going backwards.
Sure.
So Dr. King had this great quote in the '60s: "The world is moving at jet-like speed, but we're moving at a horse and buggy pace." He was talking about social justice. By the way, and someone would argue we're at that inflection point again.
Yeah.
But I think if you understand that today we've gone from a discussion in the streets to a discussion in the suites. The color's not black or brown race, black or white race, or white or red or blue politics. It's really green. So it's economics. And what does the future look like? Well, a third of this economy is healthcare. A third, give or take, is finance. A good chunk of it's real estate. Technology is like the grease flowing through all those gears. So I think if you can look toward the future and believe in it, and then say, where would I like to see myself in it? That then gives you some sense of where I think you want to put your bucket down and invest. At least that's what I'm doing.
Well, Fiverr shares are pairing earlier gains after beating analyst expectations for revenue in its fourth quarter. The company also introducing new AI tools for freelancers on the platform. Joining me now, we've got Micha Kaufman, who is the founder and CEO of Fiverr. Micha, it's always great to grab some of your time here with you. Just want to get your own take, your own perspective on this most recent quarter and what you're rolling out, especially as you're looking through the broader trend environment for some of the power users that are on Fiverr.
Good morning, Brad, and thanks for having me on the show. So basically, we've opened the market today with the opening bell with our community, which is always a celebration, and we delivered a great quarter, Q4, finishing the year very, very strong and coming up with guidance for the year 2025, a very strong guidance, double-digit growth, high EBITDA margins, rule of 30. We're very content with the results that we're delivering. And alongside with it, we just announced yesterday a major release of a suite of tools, AI tools, that are supposed to provide our sellers with superpowers. We call this the giga economy because we believe that these tools could turn a one person into a production house. And who knows, maybe the first 1% billion-dollar business coming out of Fiverr.
And so with that in mind, we're taking a look at the offering, the pricing tiers as well here. What have you noticed within the core user base of Fiverr and the type of services that they skew towards that make this a viable business opportunity long-term for the company?
Sure. So basically, the company in its very fundamental function is providing opportunities for freelancers. This is what we do. And we see how worried they are over AI and its impact on their careers. And what we've introduced is really a new take of how AI could be designed. So instead of AI being exploitative, feeding on everyone's creation and then churning out work that doesn't have any credit or opportunity for gains, what we're doing is we're creating their AI. We create personalized AI that is based on their world of creation, allowing them to enjoy both the credit and the upside, the compensations out of that work. And in the same time, it's actually saving them a lot of time of convincing customers that they're the right people to do it, because customers can play with these models on their own, and building the confidence to work with the actual freelancers. Sometimes the models are so good that they can actually buy the work, but every work comes with the editing power of the talent that stands behind this model. So unlike other AI where you're left alone to deal with the results, here you always have the actual talent to bring you to the finish line to get exactly what you're looking for as a customer.
And for those creators, for those freelancers, how are you seeing them successfully create even more business opportunities, cutting down the amount of time that it takes for them to perhaps respond to business inquiries and even produce and get back to and generate even more clients by the use of AI, and how you're expecting that to grow over the next few years?
So the good news is we've announced yesterday 2 pieces of new technology. One is the creation model. The other is an AI personal assistant. The idea around this, and there's between yesterday and today, there's thousands and thousands of freelancers that already activated this personal assistant. The idea is that what we've noticed over the years is that the first 3 minutes after a customer contacts a freelancer are the most crucial time for conversion. And freelancers also need some time to rest, and sometimes they're just busy. Now they have the assistant taking on customer inquiries, and it does it instantly. And it does it very personally because the personal assistant is entirely based on the world of that specific freelancer. So it knows how to handle the most complex questions, and it's actually being a salesperson for that freelancer, making sure that deals are getting closed. And what we're seeing between yesterday and today is that this is exactly what's happening. Those assistants they don't appear to be like chatbots. They talk in very natural language, so much so that some of our customers weren't sure if they were talking to AI or to an actual person, and they're converting really well. And this is all happening while the freelancer is sleeping or just busy on a different task. So we think that this is going to be a game changer over time. And over time, as the assistant learns how to work with a freelancer, they would also become a business partner, allowing them to get insights into how they can improve their visibility, their business, to get more exposure and more business.
Micha, just lastly, while we have you very briefly here, it's not often that we hear public companies announcing equity programs for some of the power users on their platform. Break down how Fiverr is going about this.
So essentially, I've been wanting to do this for a long time, and I'm super happy that we've got to do it now. The idea is that we're taking the top performing freelancers, the people that are the heart and soul of our community, our movement. And we say that if we shape the future of work together, they should own a piece of it. So essentially, those who are mostly loyal to the marketplace, those who build their career on the marketplace and grow their business over time, we want to give them a piece of the success. And I think that this creates an incredible alignment between the success of the company and their success. Everything is intertwined.
Micha, thanks so much for taking the time here. Good to reconnect with you. Thanks so much.
Shares of Meta extending declines after snapping a 20-day winning streak on Tuesday, closing down by nearly 3%. The multi-week rally adding more than $320 billion to the company's market cap. Joining us now for what's next on Meta and some of the other big tech names, JJ Kinahan, Tastytrade at IG CEO. JJ, thanks for being here. You make a pretty bold statement on Meta. You say investors have turned bearish on the name. What do you make of that, given the run-up that we've seen into this really brief and kind of insignificant pullback in the context of that run-up?
Well, I think that you hit on it right in the intro there when you said, 20 days in a row, basically. This is a stock that in 2.5 weeks went from 670 to 740. Just seemed like a runaway train almost to the upside. And it's fantastic. And I just think what's happened over the last week, I actually don't know that this is necessarily a longer term trade for many people. But I think what happened is people were looking at this and saying, okay, this is kind of insane of how fast this stock has gone up without really taking a breather. And so I think many people were just playing it for what has happened over the last couple of days and seeing, things come back to earth a little bit, because the pace it was going at seemed absolutely incredible, especially given what was happening to some of its peers and the fact that, other stocks were acting, I'll use the quote, more normal in terms of how they were going up with some down days, et cetera. So I don't know that necessarily this is going to be, when we talk again, hopefully in a couple of weeks, I don't know that this will be a stock that I'll be saying that our clients are necessarily bearish on longer term, because this is one that if I look back just a month and a half ago was, almost 75% of the activity was buys. And you have to remember, a normal for a retail trader is about 52% buys, 48% sells. And so when I see a stock like Meta right now, where we're seeing, almost 60% of the activity to the bearish side over the last 7 days, it just tells me that A, some people are taking profits, B, some people are just saying this move seems a little bit out of hand. And as I just looked at the numbers in the first, obviously we're only 30 minutes in, looking really quick coming in this morning, we are starting to see some people take off some of those positions and cover based on, be those options or stock positions based on the movement we've seen the last 2 days.
Now, JJ, that being said, though, Meta's run has outpaced all of its Mag 7 counterparts. So what does this signal about the investor appetite when it comes to tech? Obviously, we're still in a very concentrated market. Valuations are stretched. But does this signal maybe perhaps some buying opportunity?
Well, Alexander, I think it absolutely does. And the other part about it is, the AI game continues. I think it's still, as we're starting to see more and more in the last earnings conference calls, it's now okay, you've spent this incredible money. And besides helping middle schoolers cheat on their papers and an incredible search engine, what are we really getting done? And I think we're all incredibly excited about what can actually come from this, particularly not just in the technology sector, but in the medical technology sector also. I think maybe the most exciting place that is eventually truly transformed by AI. But that all said, it's been billions of dollars spent with returns that I think everyone's left scratching their head. However, with that said, you have the biggest players in the industry all here spending that money, all of them with lots of cash in order to do so. So we are going to start to see, in my opinion, over the next year, you are going to see a lot more developments happen there. And when you have a company like Nvidia, which obviously reports next week, I think the one thing many of us will be looking for in that is, do we still see overwhelming demand? I believe was the term, perhaps I'm paraphrasing a little bit, from their CEO in terms of what they are seeing. And all what the stocks are showing us right now is that seems to be the case overall.
Yeah, it's interesting because you say that the bulls are back when it comes to Nvidia, but the stock is down about 0.3% year to date. What is the bull case for the company?
Well, I think if you look a little bit more, though, and you say, okay, what happened with DeepSeek? Here's a stock that's made back just about 90% of what that DeepSeek news was in terms of a threat overall. And so, again, I think also, when you head into such a big earnings, which they have now become, people may be a little bit more reluctant until it's a little bit of the show me case now in terms of what they will come out with next week. As I look at the options market here, we're pricing in about a 7 to 7.5% move on those earnings numbers. So I think that also maybe have people holding back a little bit more. And so, in general, there is a lot to be excited about. And also the fact that if you look in 2024, this was a firm that in their fiscal year beat earnings on all 4 reports in terms of expectations. So I think that is also something that people have to look at.
Do you think the DeepSeek risk has not been appropriately priced into this stock? Because it seemed like it was a big deal, and then all of a sudden it wasn't. We're getting some headlines today that they're reportedly seeking some outside funding. So what do you make of how investors have digested the DeepSeek news?
Well, I think that it's again, sometimes the news from China can be a little bit tough to figure out in terms of the accounting. I think what I would say is that, if you look at what portion of development, when they said they did this for, I think it was $26 million, what part of the development are you talking about? You're talking beginning to end, and everything we're starting to see says, well, maybe not beginning to end, but maybe at the end processing, et cetera. So I think that there is what people have done is say, hold on, let's compare apples to apples compared to apples to the very small slice of an apple. And so that is why I think there remain some questions. However, I do think the real positive that came out of this overall was perhaps we as a country and maybe the tech industry had a little bit of sense of, I don't want to use the word arrogance, but we are superior and nobody can ever catch us. And so I think with this, it has been a bit of a wake-up call, which usually serves as a really good thing in business for people to say, hey, others are out there and they're going to compete just as hard. So you have to be sharp in your game the entire time. And that overall tends to be a good thing. And I think for Nvidia, we're seeing with how the stock has responded back positively, it has been a good thing overall, and the continued rally in the chip and the sort of more full sector plays that you get within Nvidia.
One more tech name before we let you go. Apple, you're seeing bullish signals. What's the activity telling you?
Yeah, so we're seeing about 75% of the activity in Apple being positive right now. And, as we continue to see some of the AI with phones, et cetera, I think Apple was under a little bit of a cloud for a while. It's certainly come back. For so many years, Apple was sort of the favorite of retail. That fell out a little bit over the last year or so, but in the last 3 to 4 months, since the holiday season started particularly, we're starting to see a greater interest in Apple again from the retail trader overall. And that is, it's back in the top 5 names every single day after being, as I said, number 1 for so many years. So people continue to want to buy the stock, see the potential going forward, even with some of the geopolitical risks that it may have.
JJ, thanks so much. Appreciate your insights.
Always a
We
pleasure.
always love talking tech.
Thanks, ladies.
Alibaba, the Chinese e-commerce giant, weighs investing in AI startup DeepSeek, which is considering outside funding for the first time. That's according to a new report from The Information. So DeepSeek so far has not raised outside funding. They've been a little bit hesitant to do that. They don't want to commercialize their products too quickly, but the need for more AI chips, the need for more AI servers, and just the sheer panic, excitement, euphoria, whatever you want to call it, that we saw last month when it comes to that cheaper AI chatbot, it's leading this company to consider that funding. That's, again, according to The Information. There's also been discussions about whether they should pivot away from primarily focusing on research and maybe towards building a business that generates some profits, some revenue. But the DeepSeek founder, he remains cautious. So it's still a big TBD whether or not this will happen. But again, Baba reportedly considering investing in the company and some other China funds as well.
Which, to your point, is so interesting given that just 2 weeks ago, Baba said we were absolutely not considering this investment, and now suddenly DeepSeek's open to it, so is Baba, which makes sense given that the usage of DeepSeek has really skyrocketed following news about the viability and efficacy of its AI offering here. It's also interesting to see them transitioning potentially to this for-profit model. That's something that investors and sources I've been speaking with have really pointed out is the critical differentiator of DeepSeek. If they do find a way to make a profitable AI platform, that could put further pressure on some of these American-based companies that are offering AI tools like an OpenAI, which has not transitioned to that for-profit model perhaps as successfully as some of the competitors in the space.
Yeah, and look, they have the momentum, right? I mean, everyone is talking about DeepSeek, and they weren't a few months ago, and now all of a sudden, to kick off 25, it's all a lot of companies and a lot of investors are chatting about, and they're focused on as we think about the future of these trades and also those hyperscalers.
Right.